Hey there, good afternoon everyone. Trader Tim from eMiniMind.com doing a Monday market analysis for the E-mini S&P, and it is the 2nd of March, first trading day in March here in 2020. Lots of good stuff to go over today. On the larger daily time frame on the E-mini S&P, when we get these big sell-offs like this, a couple things that I look for in terms of bounce point. The first, just calculating that 10% correction line, looking for big round numbers. So last week I had that 3,000 line on the chart and kind of looked at that. Where would 10% off of highs be as a potential pullback point? We came what are we, like 13, 14% off, 15 maybe. The other thing I did was draw the full halfway back here went out to a weekly chart. And that's where we bounced on Friday, picked up some good support. It's not just that this 50% line acted as some magic support. It's just that it happened to align with things like these prior lows, with thereabouts 10% correction area. And then the other thing I'm looking at is a daily candle that is the first bullish close, the first bullish candle. So the green day here on Friday, that we traded lower during the day and then closed stronger. And so I bought up a bunch of some of my long-term VUG is what I use for my retirement, the growth fund in my retirement account. It's just a ETF, Vanguard ETF VUG, and so that's where I bought her up at that 50%. Now it doesn't mean that we can't go any lower, and it's not really it doesn't really matter if we go lower from here. What matters is that on this whole move up, if you're building your building your funds, making money from a little bit easier trading environment, making money swing trading, day trading, whatever it is, if you're trading part-time, building money in your full-time job, just building up capital and just being smart with it and not necessarily buying the highs. It's okay to buy a breakout like this where we have kind of a double top, and buying the breakout, that's sort of anticipating a larger move to come. That's a good approach. But when we get to this point where it feels very extended, just having a little bit of patience and letting that capital build up, and then when the pullback comes, it doesn't really matter if you buy the bottom. It just is a good opportunity to, if you didn't have, let's say, the extra 20 grand that you had here because you've built it up in money that you've made or earned or whatever the case may be. If you don't have that 20 grand back here when the market's lower, well, as you build that up, then just waiting for a good opportunity to put it to work. So it could be profits from your trading account, or like I said, a lot of folks are kind of trading part-time and working, still working a full-time job, or maybe part-time both, and this is a great opportunity to add to those longer term accounts. As far as day trading goes, when we see a VIX that is above 35, things get pretty challenging intraday, and success comes from a little bit bigger time approach. The swings that you get intraday can be so fast and so quick that a 2-point stop can be blown through, or you can get filled and have a first target hit in a matter of seconds. And so from a reward to risk standpoint, There can be some good trades, but there's so much volume, there's so much trade activity, there's so many trade setups at times that it can be hard to filter through some of those trades. So I kind of use the 35 in the VIX as my cutoff point or my threshold. So I traded last week on Tuesday and Wednesday, but I didn't have any trades on Thursday and Friday. And then today we've come down into kind of the low 30s is where we're kind of settling at the close today. So looking for some better opportunities throughout this week. Let's see what we got. We filled a whole bunch of gaps on the way down. My notepad here with the unfilled gaps that we filled last week, I was able to cross a whole bunch off the list. We still have some. The next closest one that I've got written down is a 28.2375. So that would be, below our low from Friday. It's still unfilled. It's not too much lower, but if we look at from highs to lows where that halfway point would be, we're kind of coming up to that point, and it's at this juncture that we can, kind of pinball between the two 50% here, or if we get some really bullish sentiment, we can kind of either gap our way through this retracement. It would be a little surprising to see us go straight up, even though the move was pretty straight down. You tend to have these big monster up days in the mix, but also met with some gaps and some bigger panic still in the the kind of, if you think of this as a bear flag and the big sell-off being the pole, there's going to be some undulation here, and at least we can pinpoint, okay, the 250% can be sort of buying opportunity, shorting opportunity, and if we do break upwards, then we could look to maybe buy on a pullback to the next 50% long. Swing trading wise, and then we'll get into today's day trades. Swing trading, I closed out of 70% of my BNFT trade because we've got an earnings announcement tomorrow after the bell. And, this has been an awesome short from up here about 21, and just been riding her down. So still have 30% of the position that I will hold through earnings just because it's been such a big winner, but I did close out of a bulk of it today. And let's jump into the ES and some day trades. So today I'll pull up a 5-minute side by side just so we have some little bit larger time frame of reference. We had some low ticks early in the day that did get some bounces. This horizontal line here I have is the bottom of the first 30-minute range, and I'll go to a 30-minute chart. That'll make it a little bit more congruent. So that would be this candle here, first 30 minutes, and its low was down here about a 56, 57. It was in exactly 29. 56.75, that's what it was. So we came down after touching it once earlier in the morning. We bounced, and then we came down a second time. And so this one, we got a low tick right at 801, and had a little bit of a bounce, broke the opposing short and a swing high, and set up in a halfway back long. This one happened pretty quickly, and was a 29.59 was the long, and it did get a first target hit. And two things I wanted to point out about this setup, 3 things actually. The first being it's a low tick at the bottom of the first 30-minute range. Great place to be looking for a long setup. We broke the opposing short like this. Now if I hold my cursor here, and if you look at the vertical line that I've got drawn, notice how this swing high occurs to the right of the line. So we make our low, and then we start going higher high, higher low, higher high, higher low. I like to see the swing high that's broken to be to the left of the vertical line, which would be to the left of the low point. And this concept can be a little bit confusing. It's kind of advanced and it's very subtle, but it's the moves are much stronger, the bounce, when you break what would be this swing high. So the swing high that occurred before the low was put in, as opposed to this swing high, which is occurring after the low on the way up. So it did bounce, it did get a first target hit, but then it rolled over and we went lower. Another trick that I'll use here is when I'm, let's say we're like at this point in the day where it's we're at the bottom of the first 30-minute range, but we haven't got our bounce yet, and I'm drawing up the retracements, and I will draw up the retracement like this to see where the halfway back is. Okay, it's a 59.50, and then I know that if we, so the 61.8 is a 29.60.50. So I know that's the break point, and if the market goes up to this high, then I know that the halfway back is going to be the same, 59.50. So when I go over to my trade ladder, a lot of times on these smaller setups, you know, I'll have it drawn up like this, the short, and now I'm looking for a long. I'm looking for the short to fail and go long. When we break the 61.8, I kind of already have an idea. Okay, somewhere around 59 is where the halfway back point would be, because this high is not quite as high as where I've got the anchor point. If it went all the way to this point, then I know that this is the 50%, 59.50. And it doesn't matter if it's a drawing short or long, the halfway point is the halfway point. So I can kind of have an idea of what the long would be, 59 even, before I actually have it drawn up. So we break the 61.8 and then we pull back. And so what I end up doing is sort of, I put the order out there like a 59, and then I draw up the retracement. And, you know, mind you that a lot of times this is happening all, you know, sometimes in like, you know, 20 or 30 seconds. They can be really fast, and I don't quite have the time to draw the retracement first, so I kind of get an idea of whereabouts it would be by looking at the short, and then I can come in and, okay, yeah, 58.59, or I'm sorry, 29.59, and if it's not exact, maybe I put it at 29.58.50. You know, that's okay. You know, close is close enough, and then if we do get a bounce, then I can adjust my stop accordingly. So on days where the markets are really moving, especially around low and high ticks, those setups can happen really quickly, and I don't always catch them. Sometimes they just happen too fast, and that's okay. But you know, you catch 4 out of 5 or 2 out of 3, and that's good enough. Then we rolled over, and this long here was a nice setup. I actually had, so we had a low tick at lows at 8:08 Mountain Time, and I was looking for us to come back up at least to the underside of the 30-minute range, and you know, that was a decent. The distance basically was 10 points, even though it doesn't look very big, because you know, of the volatility, it is a big distance. So I had drawn up and put an order at 47.25, and we came down, we touched it, I didn't get filled, and it traded away here. I know it looks really small, but this was like 4 points, or yeah, 3 points. And so I took off the order because I don't like to trade a retest, and you know, that's one of those where you got a little bit lucky. It saved me from a stop out, but you know, it technically, you know, this was a retest over here. You have the green bar in the middle, and so that's exactly why I don't leave the order there if I don't get filled. I'm not a big fan of like dragging my order in and trying to manipulate it. I just, if I don't get filled, I don't get filled, and I just cancel it. So kind of got a little bit lucky there, but saved myself the stop out just by following that rule. And then there were, I won't go through all the setups from this halfway back short up here. There were a handful of various shorts that traded, but they were met with some opposing longs, and it looks a little cleaner actually now than it did at the time. And then we did end up going into kind of this triangle formation, which always are challenging in the moment. So I didn't take anything in through here, but over here, once we break a 61.8, the full halfway back for the day, this is the last thing I wanted to touch on. What you can do, because a lot of times you start trending and then you don't make a full pullback. If I use this swing low to highs, we don't make a full pullback to the 50%. So what you can do is use the swing low before the 50 and the swing high above the 61.8 and use that as your entry point. You can come down here and draw, okay, the first one, and then the second retracement doesn't quite make it back to the 50%, but then using that swing low to swing high, you could also use that as your anchor point. Either one of those, they're close enough where they both get filled. So that's a way to get into a trade at a halfway back for the day when that halfway back is failing. So this point is the retest of the halfway back short, but then we break through it, and when we go through the bottom of the first 30-minute range, we usually trade kind of straight to the top, which means we're not going to have a full halfway back entry point. So using the swing low before the 50 to the swing high above the 50, above the 61.8, if it's a short that's breaking, you can use that as your entry and then just kind of ride it out as long as you can, and trailing your stop below the swing lows, and then either getting taken out on something like this or over here when it drops a little bit further. So tomorrow, live trading session Tuesday. Check it out, emoneymind.com/VIP. Questions, throw them in the comments below. I hope everyone has a great week. Stay safe out there, and I will talk to you soon.